You know the economy is weak when people need two jobs and still can't make ends meet. The statistics are out there. We have seen many examples. No matter where you turn, example after example appear to be displaying the ultimate weakness underlying this system. You need to look no further than the multiple job holders hitting a record high. People are now accustomed to working day and night to be able to pay for a basic standard of living. This isn't prosperity. You came here for the truth, so let me unveil that for you. Today we are going to look at what's going on in the markets. We're going to talk about the tariffs. We're going to talk about the issues that are presenting themselves right now that I believe are very important. I have a lot of data to cover. Let's get into it right away. Here you can look at what's going on in the markets. You do see a sea of red. However, this is starting a resurgence. And with the market down 66 points at the time of this recording towards the end of the trading session, they may actually be able to push this up into the green. We'll see if that happens. The plunge protection team are working very hard. It looks like they didn't take a vacation day today because, as always, especially on a Friday in the afternoon, they tend to work really hard and ensure that things look good for Monday morning. Well, this is the situation that we are in today. Of course, you've been hearing about what happened with the Federal Reserve. I did videos about that. We're looking at the tariff issue, obviously compounding the problem. But something here is very interesting. Now, why would these stocks go down? Why would the markets fall to the level at which they are at? Of course, as I said, you got the tariff issues, you've got the issues going on with the Federal Reserve. But what about when actual things are presented beneficial to the markets, to the economy, and that somehow affects it negatively? Do you understand what I'm saying? No, of course not, because that doesn't make a single ounce of sense. That's the kind of topsy-turvy world we are in today. Now, you've seen what's going on with the tariffs. The US is going to put tariffs on the $300 billion worth of Chinese goods, and understand that this is one that will directly affect the consumer. Okay, it's going to have a import duty perhaps that will be on a lot of these goods. So if you're getting anything that comes from China or the companies that are buying products from China, this is going to be affected. It's going to then create higher prices for the consumer. That's going to slow down the economy further. And of course, they don't really see it like that, but that's the way it's going to be. And this right here is just all part of this grand plan. And there is a slowdown happening right now, and the only way for this to be fixed is for central banks to act and respond. That's not a good thing, because we are giving them this idea that it's okay to print money, it's okay to reduce interest rates. I want to talk a lot more about the Fed in just a minute, but I wanted to show you this. The U.S. economy added 164,000 jobs in July. That is fantastic. The job gains pushed the size of the U.S. labor force to a record high. And right now, you have Drudge Report cheerleading, saying that this is fantastic and it's wonderful, except Drudge Report, you forgot some interesting info. And that's what the Money GPS is for, because we got to get into the detail that isn't going to be there in the mainstream. This is what the alternative news is actually supposed to be. Not just a viewpoint that is not shared by the masses, but it's an alternative view. If you're not giving an alternative view, then by all definition, you're not the alternative news. This right here just looks at one single statistic. And if you look at that, it's great, it's fantastic. Let's celebrate. Let's say, yeah, rah. Now, looking at this is what you need to follow that up with. Multiple job holders and monthly change. Okay, so if you look at the blue line, you will see that multiple job holders have risen to a record high. This is surging right now, and that is not a good sign. If you see what people are doing today, whether you look at this with the Uber and gig economy type of activity that's happening, or just people in general trying to get whatever job they can, yes, that's good that there's a lot of people out there and there's a lot of businesses looking for work, but is it the type of work that you want to be in? Do people necessarily want to just take any job for any salary? I don't think that's the case. And if your job was paying you enough in the first place, you wouldn't need a second job. Now, again, as I always say 100 times, you're going to be bored, but here we go. If people want to take a second job because they like it, because they're interested in it, because it makes them happy, that's fantastic. That's great. Maybe you love to golf, and so you want to work work at the golf course on the weekend. That's fantastic. Well, that's not what I'm talking about here. I'm talking about the majority of these people who have to work a second job or they can't pay the bills. It's a simple matter of fact. In fact, if you think about it, a lot of these people are working 2, 3, 4, 5, 7 jobs if it was possible. They would actually do so and then not even be able to make ends meet. That's the times that we're living in right here, but it's not applying to everybody, of course. Certainly, that's not the case. There are people that are prosperous today. It's always going to be like that. If you look at the Great Depression, people were doing well. There's just a small minority of people that were in that position. Now, today we're looking at something that is going to be unprecedented. We are watching a transfer of wealth to everybody, the majority of people, to the few. And I assure you, if you have 7 shares of Amazon, you are not part of the few. They are going to shake everybody out, and that is the ultimate desire. Labor force participation rate 55 years and older. This is an interesting stat. If you look at what had happened over the years, it had obviously come up quite a bit. This has a small surge that we have seen in the recent past, but I just wanted to show you this because more and more people today are working in their later years. There are many reasons for this. You could say, okay, people are living longer and this and that, but ultimately there's an economic aspect to this. People don't get paid the money that they did. They don't have the pensions. The pensions are getting slashed in certain instances. We are looking at the Social Security that isn't really keeping up with inflation. Everybody knows that. And we have a lot of people that have a lot of medical bills and things as they age that are getting more expensive. You want to know where inflation is? Look at all the healthcare premiums that people are paying today. Hell of a lot. Look at the student tuition. People are going to school and they are saddled with debt that is going to haunt them for years and years to come. Look at people and the amount of debt that they hold. While interest rates have been basically declining since 1980, we're looking at credit card rates of 17%. And you look at the people, let's say the bottom 50%, have a large amount of credit card debt. In fact, I think the statistic is something like 6,000 or 9,000, somewhere in that range, that carry a balance of that amount of money every single month. These people are in big trouble. Okay, so all of that to lead up to what I believe is so important to understand. Now you've seen my coverage about the Federal Reserve and their actions recently. I got into the data that was not brought up in the mainstream. It is very informative to see what they are saying. In this case here, we are looking at this directly from the Boston Fed's website. Now, there were 2 people that were voting that voted against the rate cuts. I thought it was interesting to see what they had to say. This one individual, Eric Rosengren, who talked about why they believe that interest rates should not be cut right now. I'm going to show you the charts that are associated with this, and I think that this is very telling. According to their stats, I'm not necessarily agreeing with everything they're showing here, but look at the stats that they look at and try to analyze why are they cutting rates if the economy is fantastic. The unemployment rate is near 50-year lows, okay? If you look at the U3 unemployment rate, it's near 50-year lows. We are seeing this, some of the lowest unemployment ever. They're talking about creating stability, and of course, if you look at that stat, hey, they've done that. The trimmed mean PCE inflation rate is at 2%, okay? Depending on which one you use, the core PCE inflation, the trimmed mean PCE. In this case here, just like the Dallas Fed, they're looking at this one and it's showing us 2%. So why in the world are they going to necessarily worry about inflation if it's right at their target? The US economy is growing somewhat faster than potential. This just shows you the real GDP growth and the potential growth, and that just shows us in their own world of how they create this nonsense statistic. It just basically explains that they're right around target. The cost of credit is not elevated. This chart here shows you the real federal funds rate in terms of percentage. And think about it like this. When you see the fact that the interest rates right now are so very low, why in the world are you trying to make them lower? It doesn't make any sense. They are already low. It's not as if we were at, let's say, 10%. Then we have an excuse. Okay, we see some headwinds. Now let's start to bring the interest rates down. Quarter point here, quarter point there. there, makes a lot of sense. But of course, that's not the case. You're seeing it from 2.25 to 2.5 in that range, and they bring it down a quarter point. To me, that is nonsensical. And actually, if you think about this here, if they had brought in that range to the very bottom of it, 2.25, then they cut interest rates. They can keep it to the top of that and actually still be at 2.25. So not necessarily any cut whatsoever. This is the kind of mentality that we are dealing with today. Market volatility is not elevated, and of course we're looking at the VIX index, which is heavily manipulated. We know that the Federal Reserve has a short position on the VIX. We talked about this many times before, but anyway, just showing you, according to the VIX index, it's extremely low, so nothing to worry there. Credit spreads are not elevated. This just shows you Moody's seasoned BAA corporate bond spread over the 10-year treasury, right on the average, okay? Absolutely right on the average. Stock prices are near all-time highs. That is always a concern, because when things get too hot, things get too elevated, you need to create a system in which you create a soft landing, that you're actually trying to cushion this. You're not trying to fuel it. You're not trying to pour gasoline on the fire. Why would you want to do that? But of course, this is what they do. They create bubbles. They talked about this previously. Alan Greenspan, irrational exuberance. We've been warning about this for a while. Corporate leverage is near an all-time high, but hey, who cares, right? Because the companies are worth $1 trillion, and that means everything is fantastic. Non-financial business debt relative to GDP. Always relative to the GDP, even though it in itself is manipulated. When you measure it against that, at least it's consistent, and you could see right now, all-time high. That is very worrisome. We have seen the valuations of these companies have gone into astronomical territory, and it's only going to get worse. This is a very big problem. Look at the underlying stats. Don't look at the jobs numbers, which I see over and over and over again, whether it's come from the mainstream media, whether it's coming from the comments here on the channel of people saying, no, you don't know what you're talking about, this and that. Look, you have to do what you think is best for you and your family. That's all. What you think is best may not be the reality of the situation. What you have to do is look into the data, and data is something you cannot argue with. You can't just look at one stat. That's what we do here on this channel. We're looking at everything and anything. I look at the mainstream, I look at the white papers, I look at the Federal Reserve, I look at the IMF, the World Bank. I get all of that data. I present it to you in these videos. Many people are saying, oh, you're bringing up the same information. We track the data every single month. I bring you the new data. I bring you everything that hopefully will be informative to you, if you did find it informative. If you wanted this rant to go on forever and ever because apparently I've lost my mind, then hit that thumbs up button. If you want the financial education you were not taught in school, these two books have everything you need, all the data, all the details, everything. Click on the link in the description. If you want the audiobook, that's available at themoneygps.com. If you want to know what's going on with the Federal Reserve, then watch this video. I break it all down for you here. Click on it and I will see you there.